Hello and what is going on, lovely people of the internet? It is HOOTMONEY here with another video for you guys today. Today we're going to be talking about Roblox stock and whether or not Roblox is a good time to buy. Now, Roblox has been running in the recent weeks, and I did make a video about Roblox's direct listing a while ago now. Well over a month ago I made this video, and I personally thought that its direct listing IPO price was a bit too high just based off of their revenue model. But anyways, if you guys could kindly leave that early like on the video, that would be very appreciated, as it's the #1 thing you can do to help out a small content creator like myself. If you guys have not already, subscribe to the channel and turn on those post notifications so you get content like this every single day here on HOOTMONEY's channel. We'd like to upload and inform you about new things that are going on in the investing world. I'm excited to share my thoughts on this one for you guys today, so let's get right into the video. Alright, so now we have Roblox stock hovering around about $90 a share, and it's up from its IPO price of $64.50 a share. It's up roughly 39% since its IPO, so it has been doing some great things in terms of growth when other growth stocks in the market have been kind of hurting. And on the week alone, it is up roughly 25%. So what is going on with Roblox? Why is it jumping? The economy is getting back to normal, so doesn't that mean people won't be playing as many video games? We're going to go over all of that in today's video. Alright, so right here you can see that it broke through this technical resistance, which is this pink line right here, and it broke out to new highs. So it is kind of in a place where it is going to have to find support somewhere to find a new price for it to settle down at. Now currently Roblox has a $47.04 billion market cap, which personally I think may be kind of high, and this is because of a few reasons. Now I want to show you guys this article from the Wall Street Journal, and this was posted on the same day that Roblox jumped a lot a week ago. So as you can see, about a week ago on May 20th, this is when Roblox really took off from the $75 range all the way up to the $80 range, and it has been running ever since, and now it is stabilizing around the $90 range. However, I want to look at this Wall Street Journal article right here because it says pandemic video game habits might be hard to break. So that is the argument against these video game companies taking a beating after the pandemic is over, because a lot of these video game habits that were formed because you couldn't go outside and play with your friends or hang out with your friends or do whatever you couldn't do during the COVID-19 pandemic. Well, now it's going to be hard for these people who are now hooked on video games, literally addicted to video games. It's going to be hard for them to stop playing. Now, the article does not directly mention Roblox. However, the companies that it did mention in the article were companies that Roblox, in terms of year-over-year growth, has absolutely destroyed. So with this shifting sentiment in the video game industry, more people have been buying into these video game companies such as Roblox. If you guys are looking to get invested into Roblox stock, maybe you're using Robinhood, you don't want to use Robinhood anymore because Robinhood sucks, check out the link below to sign up for Public, where you get up to $50 in free stock just for signing up. Now, Public is a very, very awesome investing platform to use. I personally love it. I have a YouTube portfolio over there, so you should check it out. You can actually follow me on Public and see my YouTube portfolio and see what I'm currently trading and investing in the long term. It is great. You can follow celebrities on their social media. It's a social media investing platform, so it is an awesome, awesome platform to use. Again, you get up to $50 in free stock for signing up using that link in the description. So if you guys want to check out public.com, check out that link below, and let's get back into the analysis. Now, Jim Cramer has also spoke on Roblox as well, which is also a pretty cool thing. So you can see that he said Roblox has been growing like a weed, with active users up 37% year over year, with no signs of slowing post-pandemic. The company now boasts 43.3 million daily active users on its platform, fueled by an ecosystem of developers creating new content on its platform. He continued, beyond its growth, Kramer said the company is in a strong position due to its free cash flow increasing 300% and by its expansion plans in China, which are running ahead of schedule. He remained confident that there is a lot more room to run in Roblox. Now, 43 million daily active users is quite the impressive feat for Roblox. I really hope those don't go down with schools opening up, and I don't think they will, because Roblox is a very addictive platform. So with their daily active users actually being so high, that actually does fuel some long-term growth if they can retain these users, as well as obviously bringing more and more users every quarter on board. So hopefully this number does increase in the coming years and Roblox stays with these kids and they continue to play it. With the free cash flow increasing 300%, there will be more opportunities for expansion, such as their China expansion, which is awesome for a company like Roblox because they do need to expand, because they are growing at a very rapid pace, guys. 40% since their direct listing, which I also thought was a pretty high price for their direct listing. Now, keep in mind, Roblox kept pushing back the date for their direct listing several times. It was supposed to go out in December, then I think in January, and then I don't think it came out until March. So Roblox was delayed multiple times because it wanted to take advantage of the hot IPO market. And in 2020, IPOs increased a bunch and people were paying absolutely ridiculous prices for IPOs. So Roblox wanted to squeeze as much money out of the transaction as possible by delaying their direct listing so they could get a better bid on their shares. Now, I thought that was trading at a premium, and now seeing it run 40% from that, it makes me wonder what exactly the bullishness is coming from. Obviously, it seems like the sentiment is high given that Wall Street Journal article and Kramer's opinion on it. However, I did take a quick look at the fundamentals of this company, and it does have a few red flags at the current valuation. So there could be a minor correction to the price. So that could be good for you if you would like to get into Roblox for the long term, because obviously paying a 40% premium on its direct listing, which was only a few months ago, is not always the thing that you want to do. So there could be a correction. I don't know if there will be. However, I think there will be at least a small pullback. I mean, Roblox is a great stock, and it has a great brand, and their daily active users are insanely high. So it is kind of hard to value something like this because there's so much room for it to grow. However, because it is such a well-recognized brand and a lot of people do think it's going to succeed, you are paying a bit of a premium on this price. So I'm going to show you guys this right now. Now, we're going to take a look at these multiples over here. So we have a few price multiples. As you can see, the forward PE is 110, which, guys, that is not very good. That means the price is very high compared to its future earnings estimates. Then we have price to sales here at 40.1. So I think that is very high as well for a growth company. I don't really like to go higher than a 20 price to sales personally, and this was also higher than 20 price to sales when it was a direct listing. So this is just a sign that you are paying a premium. A lot of future growth is being priced in. It doesn't mean this stock can't continue to grow. It just means that more of this future growth has been priced into the current share price. And I would pay close attention to the short float, because if this short float starts going up towards these prices, right now it's only at 1.27%, which is good. But if the short float does end up going up to a point where it's around 20% of the float, that is a place where maybe you should be concerned that it is overvalued. But until then, I would just wait and see where this price stabilizes at, because it is a fantastic stock. So I think it is deserving an elevated share price. However, just know the premium that you are paying. And just to compare this to Activision Blizzard, which is a company that is not really a growth company anymore, but they are a staple in the video game industry, we're going to take a look right here at their price multiples, and they are all pretty low. Now, like I said, Activision is not quite a growth company these days. However, you can see that their price multiples are much lower. So once Roblox becomes a later stage company, they will need these lower price multiples as well, or else they will just be undervalued. So this means that a lot of growth is being priced into Roblox, and they are going to have to continue adding to their daily active users and their revenue growth combined in order to satisfy these price multiple targets. Now, I've used a screener on Finviz of the video game industry, and I've sorted it from highest price to sales to lowest price to sales. So as you can see, Roblox Corporation has the fourth largest price to sales, no price to earnings because they don't have an earnings yet, and no price to free cash flow because they don't have an annual number. Obviously, their free cash flow has increased, so that is a good sign for Roblox. But just taking a look at this, seeing how Roblox is one of the higher ones up on this list, it does show that it is slightly overvalued compared to its peers based on its current valuation. Now, like I said, Roblox does have the brand, they do have the user base, so there are a variety of other things that are factored into its current valuation. So there's always reasons to have suspicions when these companies go up, because you don't know if it's at a good price or not, and the market could be irrational more than you remain solvent, so it could stay at these high price multiples like we saw earlier. However, we just don't know, and I think that this company will have lots of increased revenue. I don't think that its player base will die off after the pandemic. Obviously, that's the biggest risk, that its player base will die off. However, I don't think it will. People love Roblox, and while I think Roblox has lots and lots of future potential, and I think if you buy it and hold it for years to come, that this stock will definitely give you solid returns as a growth stock, I do think that you are paying a bit of a high price for it as of now. I think you can get it in the 80s or even in the 70s, guys, and I think it perhaps could drop below. If there is a huge stock market correction, I think the lowest it'll get is like 50. Now that is only if there is a huge stock market crash. I am bullish on Roblox in the long run. Obviously, it's a volatile one, but it's a fun one to hold on to because it is such a great company. And yeah, if you guys enjoyed the video today, make sure you leave that like if you haven't already. Subscribe to the channel, turn on those post notifications, do all that fun stuff to hang out with me every single day here on YouTube. We appreciate you here at HOOTMONEY's channel, every single last one of you. You guys are awesome. Thank you guys for watching the video. You guys are literally taking your time out of your day to watch me talk about something that I find cool, and I find that awesome that you guys do that. So thank you guys so much for that. I really hope you guys enjoyed the video for you guys today, and that's gonna be it. Peace.